Hey folks, it's David Worrell from DIY CFO. I want to give you a 1-minute update on the PPP. Today is May 6th, and as you know, things from the SBA and the PPP loan change a little bit every day. So here's the last couple days of details that you may have missed. First of all, you should know that the IRS has, or the Treasury Department has indicated that they're going to audit anyone who got a loan over $2 million and probably people who got loans under $2 million. So there's a lot of talk about fraud and people using the money who don't really need the money. And so now they're saying, yeah, we're going to come back and audit some of the uses. They've given people who don't need the money, they've given them a chance to return the money with no penalty, no questions asked by May 7th. That's tomorrow. So there is still a window. If you've gotten a bunch of money and you have other means to take care of business for a while and you'd like to return it and not run the risk of the audit, you certainly can do that. The criteria that they are using for whether you deserve the money or not is called a self-certification, and you need to self-certify that the loan is necessary, quote, necessary for ongoing operations, unquote. So due to the uncertainty of the COVID crisis, do you need this cash to keep your doors open? And, quote, you have no other sources of liquidity, unquote. So that's a tricky one. It's aimed right at private equity groups and venture capital groups who have other deep pockets that they should be tapping into. And it's meant to make sure that the smallest and most hard hit of the businesses are really taking advantage of this program and not the public companies or the private equity owned companies. So keep that in mind. There's a couple other things real quickly. SBA came out with the guidance number 40, and this says that even though you're going to be penalized, or you would be penalized for having too few employees, for reducing your headcount, you can make an offer to past employees to come back to work and hold that job for them. If they decline by June 30th, you will not be penalized. So in other words, a job offer is as good as an employee. So you have a full-time FTE opening on your team, you make a job offer to one of your past employees that you've laid off, and if they say, nope, sorry, I'm just not interested in coming back to work, you will still get the credit as if they did come back to work. So that's going to help. Again, remember, the whole intention of this thing is to keep employees and companies together. So I think that's true to that mission. Finally, the IRS said something really unbelievable the other day, and that is, even though Congress believes that they set this money up to be a non-taxable income, that is something you're not going to have to pay tax on next year at the corporate level, the IRS said, yes, that may be true, but any expenses you pay using the money will also then not count as a deduction against your other income. That sounds a little circular, and it is, but it essentially means that the PPP money now is taxable, because if you can't deduct the money that you've spent on it and you are not paying taxes on it itself, if you have other income that would have been offset by those expenses, you now have a problem. So we'll see what happens. Congress is expected to debate that and to overrule the IRS on that, but thought you should know it, and we'll check back in another day or two and I'll have a new update for you. Just want to keep you all up to date on what's going on. Thanks.